Hey there, fellow housing market enthusiasts. Get ready, because today we're taking a deep dive into the 2025 housing market predictions. We're going way beyond just the headlines to see what's really in store. Our crystal ball for this deep dive is this insightful article from money.com. It's titled, Will Home Prices Go Down in 2025? Experts predict.
You know what's so fascinating about this article is that it doesn't just throw out predictions, it actually tries to connect them to the reasons behind the trends.
Okay, awesome. Let's unpack this. I think the big question on everyone's mind is, will 2025 be the year to finally buy that dream home? Or are we looking at another year of crazy bidding wars and those sky-high prices?
Well, the experts seem to think that prices will probably keep going up in 2025. But the good news is that the growth is expected to be much slower than what we've seen recently. The article mentions predictions from a bunch of sources like the National Association of Realtors, Zillow, Realtor.com, even Redfin. Their forecasts range from a 2% increase to maybe a 4% bump. That's a pretty far cry from that 18% surge that CoreLogic reported back in 2021. What do you think is causing this shift towards a slower pace?
I think one of the biggest factors is housing inventory. When there are more homes on the market, it tends to balance things out between buyers and sellers.
Yeah, classic supply and demand, right?
Exactly.
Okay.
And you know what? While we're not back to pre-pandemic inventory levels, Realtor.com says that we've gone from a 1-month supply of homes to a 4-month supply. That's a huge improvement.
Interesting. So does that mean we're getting closer to that balanced market everyone talks about?
Yeah, I think certain areas are definitely seeing a real shift, especially some of those pandemic hotspots where prices are actually starting to dip a bit. The article even mentions places like Austin and Boise as examples.
Okay, so even if prices are increasing more slowly, affordability is still a major concern for a lot of people.
Oh, absolutely.
Yeah.
But the money.com article actually points to a few things that could make things a bit easier.
Okay, I have all ears. Tell me the good news.
First off, mortgage rates are expected to gradually decline over the next year. That should make borrowing a little less painful. And second, wages are projected to outpace both inflation and home price increases. So that means buyers could actually have more purchasing power.
Wow. Okay, so maybe there's a little glimmer of hope for those of us still dreaming of owning a home.
Well, it's not all sunshine and rainbows just yet. It's really important to remember that the housing market is not a one-size-fits-all thing. What's happening in your city or region could be totally different from the national trends.
Right, so even if things are looking up nationally, it's still crucial to pay attention to what's going on locally.
Couldn't have said it better myself.
This is getting really interesting. It seems like we're headed towards a much more moderate housing market in 2025, which is a big change from all the craziness we've seen in recent years. I'm curious, are there any other factors besides inventory that are contributing to this shift?
Yes, actually there are. One of the things that could really help with affordability is that mortgage rates are expected to go down.
Okay, now you're speaking my language. Tell me more about these lower mortgage rates.
So the article mentions some projections that mortgage rates are expected to gradually decline over the next year. This could make borrowing a little easier on the wallet.
That's music to my ears. But realistically, how much of an impact will these lower rates have? Could it really make a big difference for someone trying to buy a home?
You know, even a small decrease in rates can end up saving you a lot of money over the life of a mortgage. It could mean being able to afford a bigger home, or just saving thousands of dollars in interest payments over time.
That's really encouraging news for potential homebuyers.
It definitely is. And when you combine those lower rates with the possibility of wages growing faster than inflation, like the article suggests, it creates a much more favorable situation for people looking to buy a home.
Okay, so there's some hope for us aspiring homeowners after all. But before we get too excited, is there anything we should be cautious about when looking at these predictions?
Well, one thing to remember is that the housing market isn't the same everywhere. National trends are just a general overview. Local conditions can play a huge role.
So what might be a hot market in one city could be cooling down in another? Does that mean all this talk about a balanced market might not apply everywhere?
Exactly. What's going on in your specific city or region might be totally different. Things like job growth, population trends, new construction, even local zoning regulations, all those things can impact supply and demand in a particular area.
That makes sense. So if someone's seriously thinking about buying or selling in 2025, they shouldn't just rely on these national forecasts.
Definitely not. Dig deeper into your local market data. That's where you'll find the information that really matters to you. Real estate is all about location, 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 right?
Absolutely. This is great advice. It seems like understanding those local nuances is going to be key for anyone navigating the 2025 housing market. Before we get into the details of specific markets, though, there's one more thing from the article I wanted to touch on. They mentioned something called a 6-month supply of for sale listings. What's so important about that number? How does it relate to this idea of a balanced market?
That's a really good question. That 6-month supply is actually a key indicator of market balance. When you have about 6 months of homes available, it usually means there's enough inventory to meet the demand from buyers, and that usually leads to more stable prices. When inventory drops below 6 months, you usually have a seller's market. That's when demand is higher than supply and prices tend to go up. And then on the flip side, when inventory goes above 6 months, you're looking at a buyer's market.
So, are we anywhere close to that magic 6-month mark?
Nationally, not quite yet. But remember, we have seen some improvement. Realtor.com says we've gone from a 1-month supply to a 4-month supply. That's actually a pretty big jump.
Wow, 4 months. That's pretty promising.
Yeah, it's definitely a good sign that things are moving in the right direction. And some areas are seeing even better numbers than that.
Okay, so we're seeing some positive signs of a more balanced market. But it's still important to keep in mind that local conditions can vary quite a bit.
You got it. It's easy to get caught up in those national trends. But remember, every market has its own unique rhythm.
That's a great point to remember. Now let's talk about those pandemic hotspots you mentioned earlier. Places like Austin and Boise where prices went through the roof. What's happening in those markets now?
Those areas are really interesting to look at. They grew so fast during the pandemic, and now we're starting to see some adjustments. The article mentions that home prices in those cities have actually started to decline from their peak levels.
Oh, wow. So is this a sign that the boom is over in those hotspots? Or is it just a temporary dip? What does this mean for people thinking about buying or selling in those areas?
That's a great question. I think we should explore the potential opportunities and challenges in those specific markets and others like them in part 2 of our deep dive. Welcome back to our deep dive into the 2025 housing market. In part 1, we talked about that predicted slowdown in price growth and the increasing housing inventory, how those point to a more balanced market, hopefully coming soon. We also talked about how those declining mortgage rates could help and how important it is to really understand your local market. Now let's focus on some strategies for buyers and sellers as they navigate this ever-changing market.
Sounds good. So what should buyers be thinking about as they approach the market in 2025?
I think the most important thing is to be patient. You know, that super fast pace we saw over the past 2 years with those bidding wars and instant offers. That might not be the norm in 2025.
So you're saying buyers might actually have some time to breathe and make some good decisions instead of feeling pressured to just jump on the first house they see.
Exactly. A slower market could actually give buyers more power. They might be able to negotiate better prices, ask for repairs, or even include contingencies in their offers. Things that were basically impossible during that crazy market peak.
Okay, can you give me an example of a contingency that a buyer might include in a more balanced market?
Sure. One common contingency is a home inspection contingency. That gives the buyer the right to have the property inspected by a pro, and they can renegotiate the price or even back out of the deal if they find any major issues. In a hot market, buyers often waive this contingency just to make their offers look better. But in a more balanced market, they'll probably have more leverage to include it again.
That's a really good point. It sounds like a balanced market could actually shift the power dynamic back to the buyer.
Yeah, it definitely could. It creates a much more level playing field where both sides can make good decisions without feeling so pressured.
Okay, so patience and a willingness to negotiate are key for buyers. But what about the financial side of things? What advice would you give buyers about mortgages and financing in 2025?
Even though we expect mortgage rates to go down in 2025, it's still really important for buyers to shop around and compare rates from different lenders.
So don't just go with the first offer you get.
Exactly. Even a small difference in interest rates can add up to a lot of money over the life of the loan. Take your time. Do your research. Compare options from multiple lenders. Find the best possible deal. And don't be afraid to ask questions. Make sure you understand everything before you sign on the dotted line.
Okay, that's good advice. Now let's switch gears and talk about sellers for a minute. What should they be thinking about as they get ready to list their homes in 2025?
I think the most important thing for sellers is to be realistic about their pricing. Those days of setting a crazy high price and expecting multiple offers above asking are probably gone.
So no more playing hard to get with the price tag?
Not necessarily. Of course, sellers still want to get the best price for their homes. But it's super important to be strategic. Understand what the market is really like right now. Overpricing a property could mean it just sits on the market for a long time. And it could even end up selling for less in the end.
That's a great point. How can sellers make sure they're pricing their homes correctly in this kind of market?
Working with a good real estate agent is super important. They'll have access to all the latest market data, comparable sales, and insights into what buyers are looking for. They can help sellers set a price that's competitive, but also realistic. Plus, they can help with marketing the property, make sure it looks its best, and highlight all those special features that make it stand out.
So even in a slower market, finding the right agent is still crucial.
Oh, absolutely. A good agent can be a seller's best friend. They can guide them through all those tricky parts of pricing, marketing, and negotiating, and help them get a smooth and successful sale.
That makes a lot of sense. Okay, let's shift gears a bit and talk about location. You mentioned in part one how important it is to understand local market trends. Can you tell me more about that?
Sure thing. National trends can give you a general idea, but it's the local conditions that really determine what's going on in a specific housing market.
So, what could be a super hot market in one city might be cooling down in another city.
Exactly. Things like job growth, how many people are moving to the area, new construction, even things like local zoning regulations. All of those can affect supply and demand in a particular area, and that can lead to very different market conditions, even between different cities or neighborhoods.
That makes sense. So, how can buyers and sellers figure out what's going on in their local market? Where can they find good information?
There are a few places to look. Websites like Zillow and Realtor.com can give you some insights into recent sales data and price trends. Local news outlets often report on real estate developments and market conditions. And sometimes even community forums can be helpful. They can give you a feel for what's happening in a particular area.
Okay, so don't just rely on word of mouth or make assumptions about a particular area. Do your research.
Absolutely.
Yeah.
And of course, talking to experienced real estate agents in the area is always a good idea. They really know what's going on, and they can give you insights that you might not find anywhere else.
Great tips. Now, before we move on to our final thoughts for part two, I wanted to circle back to that 6-month supply of for sale listings that we talked about earlier. You said that's a key indicator of a balanced market. Can you explain why that number is so important?
Sure, that 6-month supply is basically a point where neither buyers nor sellers have a huge advantage over the other. When there's less than 6 months of inventory, it usually means it's a seller's market. That's when demand is high, supply is low, and prices tend to rise. On the other hand, when there's more than 6 months of inventory, that's usually a buyer's market. Buyers have more options then, and they can often negotiate better deals.
So it's all about finding that balance between supply and demand.
Exactly. And while we might not be at that 6-month supply nationally just yet, it's good to see that some markets are getting closer. For example, some cities that saw those crazy price increases during the pandemic, like Austin and Boise, they're starting to see more balanced inventory now. And that's helping to slow down how fast prices are going up.
So those pandemic hotspots are a good example of how quickly things can change in the market.
They definitely are. It just goes to show how important it is to pay attention to those local conditions and understand how things like inventory, demand, and affordability all work together to shape the market. What might have been a super competitive seller's market a year ago could be becoming more balanced or even shifting towards a buyer's market today.
It sounds like it's going to be interesting to see how these markets change over the next year.
Well, it definitely will be. And speaking of those pandemic hotspots, I think in part three, we should dig a little deeper into the opportunities and challenges they might present for buyers and sellers in 2025.
Welcome back to the final part of our deep dive into the 2025 housing market. We've talked about so much: expert predictions, inventory trends, strategies for buyers and sellers. It's been a lot to take in. Now I think it's time to step back and look at the bigger picture. What kind of opportunities might a more balanced market create for both buyers and sellers?
A balanced market can actually be a really good thing for both sides. For buyers, it could mean a less crazy, more transparent experience. They might actually have time to think things through, compare different properties, and negotiate a price that feels fair, instead of feeling pressured to make a decision right away.
I can imagine that would be so much better than the stress of a bidding war. It would probably take some of the emotion out of the whole process. Let buyers make more level-headed decisions.
Exactly. It gives buyers the chance to make choices based on what they need and what they can afford. They won't feel like they have to settle just to get a house. Plus, they can ask for things like home inspections to make sure they're not buying a house with a bunch of hidden problems.
So it's all about bringing back some balance and giving buyers the power to make good choices. That makes a lot of sense. Now, for sellers, I know a slower market might not sound as exciting, But are there any advantages for them in a more balanced market?
Oh, definitely. Sellers might not see those super high prices like in a crazy seller's market. But a balanced market usually means things are more predictable. Houses tend to sell in a reasonable amount of time, and there's less chance of deals falling apart because of appraisal problems or buyer's remorse.
So it's less about getting the absolute highest price possible and more about having a smoother, more reliable sale.
You got it. It can be a lot less stressful for sellers. They don't have to worry about those constant bidding wars or deals falling through at the last minute.
It sounds like that stability would be good for everyone involved in real estate: agents, lenders, inspectors, everyone.
I totally agree. A balanced market creates a much healthier environment for the whole industry.
Okay, so in the last part, we talked about those pandemic hotspots, like Austin and Boise, where prices went way up. Now those markets are slowing down. Some places are even seeing prices drop a little. What kind of opportunities does that create for buyers and sellers in those areas?
Those markets are definitely interesting right now. For buyers, it could be a chance to get into a market that was too expensive before. Prices are coming down, and there's less competition than there was a year or two ago. But buyers still need to do their homework. Understand what's causing those prices to adjust. Is it just a temporary dip, or is there something bigger going on? A good local real estate agent can really help buyers figure all that out.
So a cautious but optimistic approach is probably the best way to go in those markets. What about sellers who bought into those hot markets when prices were at their peak? What should they be thinking about now?
I can imagine that's a tough spot to be in, to think about selling for less than you paid. But it's important to remember that real estate is a long-term investment. If they don't have to sell right away, they could hold on to their property and see if the market bounces back. But if they do need to sell, it's really important to work with an agent who knows the local market well. They can help them price the property competitively to attract buyers.
So flexibility and a realistic outlook are going to be key for both buyers and sellers in those areas.
Absolutely. And it's a good reminder that real estate goes in cycles. What goes up will eventually come down, and vice versa.
This deep dive has been so informative. We've covered everything from expert predictions to the potential benefits of a more balanced market to those specific market dynamics. I feel like I have a much better understanding of what to expect in 2025.
I'm glad to hear that. Remember, knowledge is power when it comes to real estate.
That's so true. And as we wrap up, here's a final thought for our listeners. If we really do see a shift towards a more balanced housing market, what new opportunities and challenges might that create for communities? How would it affect things like affordability, how neighborhoods develop, even the overall feel of our towns and cities? Those are some things to think about as you continue to learn about the 2025 housing market. Thanks for joining us on this deep dive.